Good morning, everybody, and this is your Dow Jones day trade setup for today. So a couple of things. I think first let's get this level in. You can see that was tagged yesterday, so there was a pretty decent buying opportunity there. I just want to start off on the monthly here. So we've ended up with a monthly range bar. Nothing really earth-shattering about that. We do have diversions brewing. There's a swing low. There's a current swing low. So this chart is not bearish at all. This chart is extremely bullish. So I'm looking, where is the structure? And obviously the structure would be better down below here, where we should be buying off. And don't see that at the moment. But this buying frenzy, or I'll call it a frenzy, but this buying that is happening around this area is still carrying on. And that is at 33,778. Now, back to the 8 hour. And you'll see rejection of the 155 at the moment. Nothing indicating we are going to be moving up. We are in a bit of a downtrend at the moment, so logic says you should be looking for moves to the downside. This pin bar off structure does worry me. It's not something I want to go against. And you can see on the 3 hour we've got the pin bar off structure plus a confirmation, but then an inside bar straight after that. Oscillators are crossing over. This to me is potentially indicating a trend reversal on the 3 hours. So you can see we've got the crossover of all the moving averages now, and we've had a test of one of them. I'd prefer a test of the 155, but we could just muck around a bit. We've got non-farm payrolls this week, so we could muck around for the rest of the week, allowing the 155 EMA to get up into this area for a retest, and the buyers come in off that. So this double bottom play is now very much in play. So should I say the double bottom pattern is now in play. So you can see there's the first leg of the double bottom. There is a second leg, and we've come up, we've broken through it, we've come back, and we've tested it with a pin bar. So from a 3 hour perspective, that to me is a confirmation of a move to the upside. On the hour, a little bit of a different story, and basically we have a bit of a range. Alternatively, you could call this an inverse head and shoulders. There is a shoulder there, there is a head, there's a shoulder. It doesn't really matter. Level and top, level and the bottom, those are the two areas that we need to watch for a break. So the highs and lows of yesterday are the areas we need to pay attention to. So for a continuation to the upside, 33,247 needs to give way. We've got gaps to the downside, so I don't expect that happening soon in the session. And then the other thing that I would pay attention to on this, specifically this afternoon, is this trend line here. The reason for that is that makes a flat top triangle. So bounce down here, close all the gaps, and then back up, and then bounce and back up. And remember, look, we've had 4 attempts at this already, so could be a rejection coming off there. But if that rejection does come off and it does break the trend line, you'll probably be held up by this level down here at 32,778. So yesterday's price action on the 50-minute was pretty much nothing, all over the place. We did get a crossover here, which indicated you should be looking for little scalps, and scalps were there, but not conducive to half decent trading. So we've got gaps to the downside. There's a little gap in here, there's another one here. So that all lines up with this trend line, and then we have a gap to the upside from the daily gap of yesterday, and we had gap down yesterday. So lots of magnets top and bottom. I would be of the opinion, wait for this area to settle. Hopefully it does settle. There may be an opportunity to buy off the trend line with a stop below the previous swing low. Not a fan of that at the moment, purely because the moving averages are flat. So moving averages are flat like this often indicates we're going into a range. And again, as I said, non-farm payrolls at the end of the week, so you could actually just muck around in a range. It could be this size, or it could be slightly bigger, but I don't think you're going to get much traction until we have non-farm payrolls out the way. So that could be the low, this could be the high of the range, or that high there could be the high of the range. So that's kind of the view that I have at the moment, and there's nothing really indicating that we have a continuation or a rejection at the moment. So I'm very cautious on all indexes today. It doesn't look like there is anything brewing that's of any interest to me at the moment. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.